Hey everybody, welcome back to the Financial Freedom Show. My name is Rob Berger. We're going to talk today about how to implement a three-fund portfolio in Vanguard. This question came up from a good friend of mine named Paul. He had read my book, Retire Before Mom and Dad, and I talked about the three-fund portfolio there. I've talked about it in this channel before. And this question was, how do I actually get started in Vanguard? And how do I calculate the shares that I need to buy and actually do the steps and the transactions to sort of get set up and get going with the three-fund portfolio? And I get it because it can be confusing and frankly intimidating. So here's what we're going to do. We're going to walk through how to do it, and I'm going to give you a lot of resources that I'll link to below this video in Vanguard. Then I want to show you how to do the exact same thing, but on a platform called M1 Finance, because it adds some free tools that frankly make it easier. Then we're going to go even a step beyond that. I'm going to show you what that might look like using Betterment. It's an automated investing service. Some would refer to it as a robo-advisor, which even goes a step further in giving you some tools to help you automate the whole process. So with that, let's get started. We're going to assume for our three-fund portfolio, in this case, that we're just going to use Vanguard ETFs. You could think of, say, VTI, Total U.S. Stock Market ETF for the U.S. stocks, perhaps VXUS or VEA for the international stocks, and a fund like, you could do BND, which is a Vanguard Bond Fund, or AGG is another example. The specific funds that you use aren't important. You could buy all of those from Vanguard. You could buy all of those at Fidelity or at M1 Finance. So the specific ETFs aren't that critical for our purposes. But with that, let me walk through how we're going to do it. And we're going to start on a website. Again, I'll leave links to everything below the video, but this is support.vanguard.com. This is, as the URL suggests, Vanguard's sort of support section of their website. And it has a wealth of information. I highly recommend that you take a look at this if you are on the Vanguard platform. The thing I want to jump to is actually they have these instructional tutorials that they walk through. And here it is. And I want to actually scroll down to how to buy an ETF. So we're going to assume you could also do how to buy a mutual fund if you were going to implement the three-fund portfolio with mutual funds. So you can choose. We're going to just, for our purposes, use ETFs. And this is how great these tutorials are. They literally walk you through step by step. And for each step, they have this short screencast that you're looking at here. And they walk through exactly how to do it. You go to My Accounts, Buy and Sell, and then here, Trade ETFs, if that's what you're going to do. And that's sort of the first step. Of course, this assumes that you've maybe connected your bank account to Vanguard and transferred over the money that you want to invest. And then you're here, step two is which account. Now, you may only have one account at Vanguard, but if you have more than one, you're going to select the account. It could be an IRA. These are just examples. Could be a taxable account, but you need to select your account. And then here, select your security, what you're going to buy. And it is a buy order, not a sell. And you're going to put the ticker in. So again, we could use VTI as an example. And then here's what I think my friend Paul kind of got stuck on is, how do I figure out the shares, the number of shares? And there are actually two ways at Vanguard, and I think most brokers, you see this, I don't know how well you can see it, but below this box is it says calculate dollars to shares. And what you would literally do is say, okay, let's imagine you're going to invest $10,000, and just for sake of numbers, you're going to put 60% or 6,000 in VTI. Well, here you'd literally click this link, calculate dollars to shares. You'd put in $6,000, and it would calculate for you, based on the price of VTI at that time, how many shares you can buy. And it will fill it in for you. That's the next step. And then here, the order type, this is relevant to ETFs, wouldn't be relevant, I don't think, for mutual fund purchase. But here, I think with these kinds of ETFs, I've always just used a market order, which basically just means you're going to pay whatever price, the prevailing price, when the order executes. With these types of ETFs, in my experience, they execute, frankly, immediately. And so it closes almost immediately. Then you're going to review your details of your purchase. They actually use VTI in this example. And then you're going to, after you've previewed the order, You're going to confirm it, purchase it, and you're done. It's really that simple. Then you're going to do the same thing with your international stock fund, if it's say VXUS, for example. And then you're going to do it all over again for your bond fund. And of course, you need to know what percentages you want in each of them, and you're done. It's really that simple. Now, it doesn't quite end there, because you then have to deal with, what about future purchases? And do I have to go through these steps each and every time? And then there's the question of rebalancing. And so we could talk about those briefly. The good news is Vanguard walks through. They have their video tutorial library on how to set up automatic investments. And it literally walks you through how to do each one. And it can be tricky if you don't know where to go. So you notice here, they're going to profile and account settings, and then there's an option for automatic investments. And from that, you can actually set that up. Again, you've got to select what account you want, and you can make your automatic investments based on a dollar amount, or you can set it up so that the automatic investments get allocated by percentages into, in this case, each of the three funds that we've talked about for a three-fund portfolio. And again, it walks through how you confirm that. All of it's right here. Again, I will link to this for you. Now, when it comes to rebalancing, particularly if it's ETFs, you kind of have to do it the old-fashioned way. You have to calculate how much you need to sell from, say, maybe your U.S. stocks have gone up in value and you wanted 60% in a U.S. Stock fund, and now it's 70%. Well, you have to calculate, how much do I have to sell of that fund to get it back to 60%? And then you have to say, okay, from those proceeds, how much need to go to the international fund and how much need to go to the bond fund to bring all three back into your original allocation, all the while thinking about taxes if it's a taxable account. If it's an IRA, there are no tax implications for this, but if it's a taxable account, you always have to be thinking about taxes. Is it complicated? No. Is it tedious? Yeah, a little bit. And so some folks say, well, how do we make this a little easier? And so that brings us to M1 Finance and then eventually to Betterment. So let's talk about those briefly. Here's M1 Finance. This is a three-fund portfolio that I created. Again, I'll link to this below. I've used, again, VTI here, VXUS, and BND. Those aren't the only ETFs. You could use a Fidelity ETFs or others, but that's what I've chosen. And if you invest in this pie, you literally, if you have an account, you can click the link, invest in the pie, or you can create an account. You can change these percentages. This is an 80-20 portfolio, 20% in bonds and a total of 80% split between the US stocks and international stocks. You may want a different allocation. That's perfectly fine. But here's what M1 Finance does. Once you've set up this, they call it a pie, and you contribute to it, it automatically allocates whatever amount you contribute to each of these funds based on whatever percent you've set. Here's the other thing they do. As you make, let's say, monthly or quarterly or yearly contributions, it will take that contribution and divide it among, in this case, these three ETFs in amounts designed to bring you back to whatever plan you've set up. Again, we're looking at 50, 30, 20. Yours might be different. The other nice thing about M1 Finance is if you do want to rebalance beyond just the contributions you're making, you can literally click a single button in M1 Finance and they will automatically undertake all of the transactions you need to buy and sell among these three funds to get you back to your asset allocation. It's one of the reasons I really like M1 Finance, and the service itself is free. Of course, you pay the expense ratios of the underlying ETFs, but of course you do that at Vanguard as well. But M1 Finance is free, and you get those extra tools that frankly just make managing even a simple three-fund portfolio a little easier. Now, finally, I do want to mention Betterment. Betterment kind of takes it even a step further. It offers probably, I think, the most automated investing features of just about any platform out there. So, it will rebalance for you. You don't even have to press a button. They'll do it automatically for you. If you have a taxable account, it'll do tax loss harvesting for you. If you have multiple accounts, like a traditional IRA and a Roth IRA, maybe a taxable account, it will help you figure out what types of investments should go into each to maximize the tax efficiencies of each type of account. If you're in retirement, it will help you set up withdrawals from your accounts. If a withdrawal is going to trigger taxes, it will let you know what that is before you actually trigger the withdrawal. It has planning tools that help you calculate whether you're on track for retirement or buying a home or saving for a child's education. So it really has, I think, probably some of the most full feature set for investors. However, there is a fee. And sort of the basic fee is 25 basis points. That's 0.25% or 1/4% of the asset you have invested with them on top of the cost of the ETF. So it's important that you weigh whether all of those features and conveniences are worth the extra 25 basis points. You actually can implement a 3-fund portfolio in Betterment if you want to. Let me show you what that looks like. Here we go. So I don't actually have any money in Betterment, but I do have an account there. And I've kind of gone through in a retirement portfolio and gotten to this point in the process to show you this. So you can choose a portfolio built by Betterment. Now, this is not going to be a 3-fund portfolio. We'll look at Core, for example. Core invests in, as you can see, a number of different ETFs. And you might be saying, well, I kind of wanted the simplicity of a 3-fund portfolio. Perfectly fine. The one thing to keep in mind here, though, is that Betterment does all the work for you. I mean, you really don't have to do anything. It rebalances for you and everything. So while it involves more than 3 funds, it doesn't require any additional work on your part, but you could, if you wanted, actually implement a customized preset portfolio. And here you can put in and create a 3-fund portfolio. So here's VTI. So we'll put in, we'll say 65%. And we would zero out all of the other US stock funds. We don't need them. And they use VEA, which is great. So we'll put in 25%. That's for international stocks. And then for bonds, for like an aggregate bond fund, we'd go with AGG probably, and we'll put 10% in. And there you go. There's your portfolio. It's a 3-fund portfolio. And again, from that point forward, Betterment does all the work for you. I think Betterment, where it really starts to pay for itself, is not if you have a single fund, like say one IRA, but it's when you have multiple IRAs, a spouse with multiple IRAs. Maybe you have a taxable account, you need tax loss harvesting. When you start to get more complicated, I think it's when Betterment becomes a more compelling option. So there you go. I've walked through it quickly, but how to do it in Vanguard, again, their accounts are free. How to do an M1 Finance, an account there is free, or how to do it in Betterment, where you get some extra features and tools to automate even more complex investment scenarios, but there is a 25 basis point fee. I'll leave links to everything below the video. And of course, if you have any questions, leave them in the comments below. I'll do my best to help you out. And Paul, I know you watched. I hope this walkthrough helped you. But of course, if you have any questions, let me know. Until next time, remember, the best thing money can buy is financial freedom.